By the end of 2024, Nvidia is on track to reach an unthinkable price objective. Watch the video through to the end to learn why. Although faster computing and broad artificial intelligence are popular fads, I like to think of Nvidia as a stalwart because it has been in business for more than 10 years. People always thank me for recommending it, by the way, wherever I go. You're welcome, I'd reply, but the real winner is Jensen Huang, the unquestionable CEO, for whom I have, to be honest, nearly run out of praise. I had best think of some more if they repeat the same thing in the third quarter. When was the last time you used a thesaurus? I am aware that there was a general perception going into this quarter that the stock of Nvidia had moved excessively and that it was time to engage in some couching profit-taking. This week, I heard that on our network multiple times every day. Despite its $3 trillion market valuation, I believe Nvidia is unparalleled in its capacity to bring about this next industrial revolution, as Jensen has repeatedly highlighted. For this reason, I advise you to own Nvidia rather than trade it. Because of this, it has increased by about 37% in just the second quarter. Next week, Nvidia will be released. You mentioned it briefly earlier in the episode, Josh. To remind people, we're going to display a visual right here. Although we don't discuss Nvidia as much as we used to, the company is heavily weighted in both the S&P and the Nasdaq 100. According to our data team, implied volatility following earnings is 10% either up or down. Dear Anastasia, I'd like to visit you. With this earnings report approaching, might this be the reason for the volatility that many people are observing? Are you worried about the potential effects on the market? Well, it's clearly a big one for the market, but I'm not too worried about it since, considering everything else we've heard from Meta, Amazon, and others, I find it hard to believe that a firm like Nvidia doesn't deliver. In particular, I mean that such companies are investing in AI regardless of whether they can now make money off of it. Data centers and data center chips are what they are investing in. That capital expenditure cycle, in my opinion, is still very much in place and is being updated for 2024 and 2025, which will obviously help a business like Nvidia. However, it spreads out. Analog Devices released a positive earnings report this morning, or overnight, I should say. And from what I could gather, they're experiencing a lot of growth in the industrial and automotive areas, as well as an increase in orders. Therefore, I believe that the good attitude surrounding AI and the possible decline in cyclical semiconductors make it clear why investors are still interested in this market. By the way, we are discussing returning to the S&P's all-time high. The semiconductors SLX index is still over 10% below its peak. I would like to share with the public a small, unofficial indicator I have for such circumstances. But it's unofficial. Jensen Huang continues to produce podcasts. He recently completed one for Stanford. He performed live alongside Mark Zuckerberg at his own convention the previous week. CEOs who are likely to fall short of their goals are not spending time on podcasts like Joe Rogan. He never stops talking, and I'm not sure how to measure that. Expectations are high, so I'm not sure if there will be another drop the mic quarter, but I find it difficult to imagine this being a bomb. I believe that Nvidia is either the number 1 or number 2 name that is closer to its record highs out of the Magnificent Seven. The issue is that they anticipate earnings of $10.64, or 137% year-over-year growth, and revenue of $28.6 billion, or 112% year-over-year growth. When you're already the third largest market capitalization on the planet, these growth rates are truly amazing. The man is out and about, but the expectations are enormous. Unlike Ben Affleck, he is not wearing sunglasses in a motel room. If you're going to startle people to their detriment, you're not doing it while he's on the scene. It simply isn't taking place. What would happen if he changed from wearing a leather jacket to a jean jacket when we were using alternate data? It implies that he is a gangster by certification. Do you want me to say anything else? In addition, Nvidia's stock is down 1.12%, though it did slightly rebound while Josh was speaking. That's intriguing. Frank, that's my indicator. The indicator's power. Big Tech has been telling us the exact opposite tale. Following their reports, shares of Microsoft, Google, and Amazon were heavily penalized because they stated that they would be increasing capital expenditures to further their AI goals. However, Nathanson notes that Apple is the exception to the rule, spending only about 2.5% of sales, while its competitors, of course, spend far more. Since Nvidia is the one that everyone is following, we will only be able to observe the true effects of that capital expenditure drive. In the past, Nvidia was the engine powering Tesla's innovative technology. Until the firm finally created its own internal systems, these GPUs powered Tesla vehicles. These original Nvidia cards are now highly sought-after collectibles that sell for hefty prices on the illicit market. For instance, some rare models have sold for hundreds of thousands of dollars, and one specific model is presently going for $199,000. Get yours now by clicking the link below, but don't delay. There is very little stock. I wonder if investors' perceptions of the overall capital expenditure picture are based on the growth/investing balance that technology has had to achieve due to artificial intelligence, or if they are more about concentrating on the businesses that supply the materials, the HVAC, cooling infrastructure, wiring, and cement, all of which are extremely unsexy, but are what really make it happen. In the midst of this massive surge in tech investment, certain market segments have been neglected. Could you perhaps give this some color, Stephen? All of this is connected to the notion that these investments will yield a significant return. Well, what is Microsoft's uptake of these? Is a question that people frequently ask. The key question is that, throughout the season, we heard the same thing repeatedly during these earnings calls. Okay, so you're spending these huge sums of money, $19.20 billion every quarter on capital expenditures. When are we going to see a return? When can we expect revenue to increase? We don't know, but we know the demand just keeps accelerating, is the response given by almost everyone. Microsoft claims that they are unable to keep up with it. We simply lack the capacity to do it. Thus, we are now outsourcing things to Oracle. Thus, there is a real need. It's already there. You talk about placing the cart before the horse. That isn't even a concern for them. They have nothing to get ready for. It's happening. It's here. They say that repeatedly. Returning to Sundar Pichai, the CEO of Alphabet, he stated that he would rather to overpay than underspend. Given all of the demand they're experiencing, he would prefer to make the error of overspending. The plot is quite different from what you usually see. Nvidia, the unchallenged leader in AI and high-performance computing, is about to experience a significant event. The demand for their potent GPUs is through the ceiling, and their most recent AI innovations are revolutionary. Let's discuss numbers. Analysts on Wall Street are already speculating about price targets between $150 and $200 per share, which represents a 20% to 60% increase from the current level. And that's only the immediate picture. It has been really toppy over the past 2 days. The same is true of Nvidia. There is your market leader. It peaked in 8 trading days after being at $105, then at $130. We have witnessed it move to the downward once more in the past 2 days. How do you interpret the fact that there is still little volume heading into next week, and yet major tech catalysts like Nvidia have the potential to influence the market? Recall that we are aware of Nvidia. For the past year, their earnings acceleration has slowed. They're simply not developing as quickly as they once did, but we still know their earnings will be fantastic. They need to come up with another excuse to boost their profits. I'm not sure what it will be, but if they significantly increase their numbers, the street will be taken aback, which will cause it to move upward. In the past, Nvidia was the engine powering Tesla's innovative technology. Until the firm finally created its own internal systems, these GPUs powered Tesla vehicles. These original Nvidia cards are now highly sought-after collectibles that sell for hefty prices on the illicit market. For instance, some rare models have sold for hundreds of thousands of dollars, and one specific model is presently going for $199,000. Get yours now by clicking the link below, but don't delay. There is very little stock.